like every single time I don't do it, something go wrong. Okay, let me see. How come it's not up and running yet? Hmm. Okay, it's up. It's always a lag, but the lag is uneven. Hopefully, it's not too glitchy today on YouTube. All right, TLT surprised the heck out of me. Okay, um, especially for those that pay attention to what the Fed is saying. Yesterday, one of the key Fed member that have a vote said that she said in one of her interview, she said that there is no, she does not see a compelling reason to pause. So the Fed, in many interviews in the past few weeks, each one of them have been jawboning into talking about higher rate still and not pausing. So it's to my surprise that TLT is stronger in pre-market right now. I'm not complaining. Uh, in fact, the two puts that I assigned last week at 102 are looking in the money because, of course, when I assign them, the break even is 101 something, 101.7 ish. So, yeah, I'm not complaining. I do have plenty of exposure here. So, the question is where next? Uh, if I have TLT, which I do, one thing I would do is perhaps sell cover call at 103.5. Okay, up there. That's a long ways away. We can get there. If you want to be greedier, 104. Okay, because between 103.8 and 104, you can have potentially. I drew in this channel. It could be okay. Look, you have the gap fill, you have the 2-day moving average. There's a whole lot of resistance up here. Okay, so if you want to do a 104 cover calls, I don't know if there is any premium in that. That might be, hey, if it's a dime, why not? If you have a whole bunch of share like I do, I would not. I would mind grabbing a dime. That's lunch at Chipotle, right? Um, but for now, that is it. Is Does that mean that the bottom is in for TLT? Perhaps the line in the sand is in this area, okay? Because Reflow back in early March was right there, was 99.96. Okay, so let's draw in that line so that we have it. Okay, let's do that. And of course, a couple days ago, what did it come down to? It came down to 100, came down to 100.03. So roughly in that. Now we still have the gap fill below, right? So it's still possible if econ data is red hot. Do not be surprised to see a potential dump and test that gap fill. Gotta be careful, okay? As much as I hate it, economic data is extremely mixed. I don't like what the Fed is doing. For the record, I'm sure you have heard me complain enough about the Fed, but if they are going by data alone, especially lagging data, there is compelling reason for them to raise again. I hate to say it, but economic data this past couple of weeks has not been kind to the camp that believe that TLT bottom is in and pausing is in the horizon. But if you pay attention to economic data, it's not saying that. All right, let's go to the two big elephant in the room, and then we can move on. Of course, one is OTA. Ugly, 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 ugly. Okay, now, um, If anything, this is a perfect example of the rules that you heard many times on TV and many talk shows and YouTube channel, that on a big dump on any stock, give it 3 days. Okay? Just give it 3 days. Today is the third day. We'll see what happened on the third day. It came down right where I hate to see it where it go, right? Because I drew in this line before the dump, right? So let's go back. Where is this line? What is this line? This line is down here, okay? You're talking about a multi-year channel low. Okay, let's go back 10 years. Let's see. Look. Okay, that's ugly. That's super ugly, right? So you're talking about something that happened, the pandemic. That's the pandemic low, right? So you got to go back 3 years for that channel. It's been a pretty well-defined channel, and wow, the last time that we had this kind of a significant decline in OTA was the pandemic. That says a lot, okay? This fell just even faster than what happened in the pandemic. And of course, before that, look, we have had 3 occasions where OTA did this kind of a significant fast decline. You can go back to August. Look at that. Yes, August, March, and then now. Okay, so as ugly as it is, I think today could be the last of this ugly decline. Surely, I had my position, my put that I roll from last week. I feel okay. I feel that by Friday I should be okay. If anything, I can still roll it one more time, and that might be it. Now, the other ugly is, of course, Target. That's a different story. Okay, Target is beyond just shrinkage, as I discussed already last stream. We have social issues, ESG, pandering to the minority group that anger the majority. Um, I can't say enough about my political stance on any public companies. Stay neutral. It is that simple. It's not hard. Okay, stay neutral. There is no reason to pander to a 1%, to appease some loud voices. Social media is loud. We all know that. But social media is not the majority. There's a lot of weak-minded CEOs out there that worry about what social media says about them. That's why they pander to ESG, to the minority group, because they're so afraid to hear criticisms on social media. The 1% is loud. You know what's not loud? The majority. Because why? The majority are busy working. People don't understand that. The majority is, even my 16-year-old son know that. He understands that social media is for the morons, the lazy, the people that have nothing better to do than tweet all day. Working people are busy. So the silent majority, they're busy working. Okay, they're not out there yelling and screaming on social media because they're upset that they're not equal. Life is not equal in any way. So let me get off the podium. Did I anger some weak-minded wokeness out there? I hope so. There is no room for wokeness in the stock market. Just ask Disney, how has wokeness helped? Long ago, there was people in my investment group that disagree with my stand politically. And one of the person debate with me on Disney. Disney weakness, according to him, has nothing to do with wokeness. It's other things. I'm like, no, it's wokeness. It is wokeness. And how has Disney fared in the last 3, 4 years when wokeness invaded their corporate culture? You think Disney stock has helped? Mm-hmm. All right. So what's next with Target? I think Target has reached, I would call it a bottom, but a bottom can go lower, right? So I just have to grin and bear it and take a loss here. If it does not work as far as rolling down and now, I can keep rolling. Okay, I can keep rolling until the bottom. It's ugly, right? I'm not gonna lie about it. It disappointed me. Okay, I like Target for so long. Selling puts at 152 was such a great spot. And even when it failed, the few occasion time when it failed, it has reversed. What can reverse this? Easy. It take the top of Target, the CEO, to get fired. Yes, at this juncture of Target, it take the board, it take activists to come in and say, "You're fired. You're a moron. Get the F out of here. Close the door, kick him out." But to me, that is really the drastic change that is needed for Target to turn around, because when you have this revolt from consumer because of your wokeness policy, it's hard to turn the ship around. Okay, so for me right now, Target is a lost cause. I do think the risk reward is, for those that are not involved here, is of course sell puts lower. How low? Perhaps 129 and below. Now, why do I say wokeness is bad? Budweiser, okay, the other one. Thankfully, I was ahead of this mess and stay out of it. I thought 58-ish was the bottom. I thought 200-day moving average was the bottom. Wrong, 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 wrong. Okay? This is what happened. If you're not familiar with Budweiser and its wokeness policy, this is what happened. Okay? This is another one of those CEO that utterly failed at all level on managing crisis. Um, when this crisis started with their wokeness policy, oh, U.S. sale is only 28%. We're not worried about that. It's on. Well, guess what? When you have a 30% decline on your 28% market share, it hurts. It is a 5% plus decline overall. When's the last time Budweiser have a 5% decline in volume in the last year? Ever? Well, this is what happened when you have a 5% decline in volume. Okay? Holy cow, gap fill. There was three area that I thought could be the bottom for Bud. I have no position, thankfully. Thankfully, I did not cut. I thought that the bottom was here, right, in the 57.5 level, the ref low. If not, the gap fill, the 200-day moving average, I thought for sure this confluence is going to halt it. Guess what? Clean cut, clean gap down. What's next? Down here, okay? With my exposure to Target, I have no stomach to deal with this right now. So thankfully, I have no position. If you have a small position, I say give it time. I wouldn't recommend adding here. You need to see drastic crisis management move to halt this this social movement against this pushback against management to pander to the minority. Okay, it doesn't work. I hate to say it does not work. Speaking of the last of the wokeness company, Disney. Yeah, it doesn't work. Okay, Disney is at the ref low in that area. If you want to buy into Disney here, it's not a bad idea, but I don't like the action. Okay, I don't like the action here on Disney. And if you, Disney had multiple problems. First of all, their movies, their TV show had been utter poopies. Okay, I'm trying to keep this channel clean. Utter poopies. I have been a big fan of Disney movies and TV shows for a long time, but the wokeness there had turned many movies and TV shows into utter poopies. On top of that, Disney has crushed the consumer at the gates at all of their parks. The fees is insane. The fees, the cost to go to Disney Park is insane, and it doesn't help when some consumers are not liking the product. They have a decline. Disney have a decline in viewership. Um, Not a good thing. Okay, not a good thing. The subscriber base decline on Disney Plus. Why? Terrible TV shows. Um, I don't know where Disney is spending billions on content as far as for their streaming service. Where is it? Where is that billions going? They barely have one new series a week. What are they spending the money on? It's horrific. It's just Bob Iger coming back, give the stock a pop, but then he has a lot of work to do. And doubling down on wokeness is not helping. Okay, not helping at all. I'll be right back. A second. All right, let's jump into some other area. Eli Lilly is holding here. Okay, it's yes, it's below the 20, but it's holding this top line of the top end of a channel. Nothing to do here. Okay, I had my position. I was looking to sell 410, 405 spread, but that didn't trigger. But that's the only thing that I would do. Ideally, what you can do, even a better play, is instead of like selling weekly spread, if you want to participate in Eli Lilly, you can sell spread going out, a couple weeks, maybe 2 months at the most. But you can do something like 380, 360 kind of spread, way down here, using at least the 50 as your protector, right? But that's the only thing I would do. JSK, I'm nibbling back the share that I sold up here. Right now, it is this entire sector. Big Pharma has been a source of fun. Yes, I have used that term enough time. Hopefully, you understand. For tech, for Nvidia, for Meta, for Google, for Microsoft, all the big tech to go up, money has to come out. A, either from the sideline, or B, coming out from other sectors. So there's a drawdown across the board for many company, and Big Pharma is a good source of fun. Pfizer, same thing. I said it for weeks now that as much as I like Pfizer, I just don't see a compelling reason to add to my position until the reversal in trend. There has been a couple failed breakout, right? That this was a nice move here of the result of their weight loss drug, which I like. Okay, this is long term. I think buying Pfizer here in the 36 level, you can see a double. A year from now, you can look like a genius. But there's time. There's no rush into it. Okay. J&J, same thing. I like it down here. Would I sell puts at 150? Maybe, right? To me, it's a safer play to sell put spread, say 150, 145. It's not a whole lot of juice. Okay, so for me, if you want to buy share outright, you can. Buy a little share down here. But no, it's unfortunate. It's in a drawdown from people wanting to put money in AI, right? XPI, uh, put spread where 79.75. Okay, to me, that's a safer area. At least use the 50 as a protector because sure, the 200 is here, but if it slices through 200, it's gonna get down to the 50 in a hurry. But that would be how I would play XPI. Uh, and I did that. I saw a spread down there. There's a lot of tech that is look at Moderna. Okay, if you bought Moderna into the next COVID variant, well, that was a short-lived 2-day pump. Ugly. Okay, I'm telling you, I'm not a big fan of any of these uh, COVID medicine things. Is just people are burnt out. They are completely burnt out on this stuff. They don't care. Okay. Oh, Amgen. Amgen was a bright, one of the few bright spot because it's at a key long-term trend. At least this one bounced, one of the rare green candle in pharma, big biotech yesterday, and look like it is continuing to show strength. So maybe the bottom is in. Maybe. Let's go back to see where. Yeah, right here. Okay. When it comes down to technical analysis, sometimes this is all you have. Okay. All you have is using backward looking to see where the potential bottom is. And look, going back, how many years is this? 5 years. Okay, look, bang, 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 bang. Okay, so it's not a coincidence. It's not random that Amgen is bouncing off this level. If you want to buy share outright down here, which I might not be a bad thing either. Okay, I like it here. Both in put spread. I do have put spread that I rolled from last week that I think is in good shape for now. For now, last one in big pharma. AbbVie. Oh my goodness, what is going on here? Right? What is going on here? Is there any kind of technical point that we can draw here? Not really. Okay, not really. It's it's at the point if one of those reference low that it should keyword should bounce. It been here 1, 2, 3, 4. Okay, yes, it has violated a little bit here and there, but overall it's also near the point of low. If you want to outright buy share here, which I might, all I have right now is put spread, but I do think the risk reward right now um, is to add or go long into big pharma. The big run in AI is not going to last forever. Okay, it's not. Nothing lasts forever. No, there is already a parabolic move. SMH, insane, absolutely insane. I don't know why I draw this line. I'm not sure what even prompted me to draw. Why did I draw that? That line has been drawn many times, but I'm not sure why I even drew it in there. It's nonsense. Let's remove it. Let's remove that drawing and removing this one too. Sometimes I think it can safely say that the blow up top could be. Would I chase SMX here? No, absolutely not. Okay, but if you look, that's a nice looking trend line there, right? Duplicate drawing, drag this up. Yeah, look, busting through channel high. Okay, all right. So next, what's next in store? Look like pre-market is already checked back. So I would say it's time to go, right? Time to go. All right, let's take a look at LMT. I have been selling put spread way below, okay, 435, 430. I'm using this trend line right here as my protector, okay? This trend line right here. Let's go back 3 years. Yeah, it's a trend line that go back to the pandemic, okay? Look, well, the pandemic low is way over here, but I drew that line from this point to this point to this point to this point, and that's where 435, well, it's near 436, okay? That's why I write 435, 430. Now, can it come down all the way down to 418, 419, 420? Yeah. To me, that's, if that breaks, if 435 breaks, then 420 is a real possibility, okay? So be careful there. 418, 420, yeah, it's a whole lot of potential down here if it breaks, okay? So I have some exposure, not in big size. I had 11 spread last week that expired worthless, so I was much more aggressive last week. Right now, I just have 3, and I am prepared to step in way down here, like 425, 420, 420, 415 should is a break below. The budget is in. The resistance to me is, I think the path of least resistance should be higher for Lockheed Martin because they're not cutting defense. They are not cutting defense. If you look at other defense stock, they all has reached a bottom, real low, like General Dynamic. Wow. Okay, to me, if you want to play in General Dynamic, I think that is also a pretty good area. Okay, it's if you want to call it channel low, yeah. Okay, we are there. Okay, you can draw however you want to draw it, but yeah, I like this. Okay, to me, General Dynamic. If you want the 3 play in defense, of course, General Dynamic, Raytheon, and Lockheed Martin. And I think Raytheon look uglier. I think General Dynamic look more like a bottom to me. Okay. Speaking of airplane, of course, let's take a look at Boeing sideways. Okay, it's nothing here. To me, I just don't see a compelling reason to be in Boeing. I watch it for entry, but nothing there. Let's go to financial, AXP. If you bought AXP down here, which I saw a lot of put spread the last couple of weeks, it works. If you have it, time to go. Trim at least, okay, sure. If you should trim here, and then of course trim more into 162, 163, yeah. But the time to add was down here, right? Not now. Costco. Costco earning was not great, but it got money flow from this sector. If you have allocation into big box retailer and you're selling out of Target, and for those that know Costco, Costco have no shoplifting problem. I really think Costco model is the best model for big box, whether you Walmart or Target. Can they do the same thing at Target? Harder to do, right? Because Costco does not have 10 store or 5 store in every cities. In every big medium-sized city, they don't have that. They have 2, right? Usually 2 or 3. That would be pushing it. And it's easier for them to implement the policy, which they have been doing for a long time. It's no way to shoplift. Well, I would say it's impossible to shoplift, but you have to show your receipt. And of course, they sell big item stuff, right? So a lot of the stuff they sell is big things. Can't shove something under your pants. But that's the explanation. It's not a joke on why there are allocation chasing into Costco, even though the earning is not good. Would I buy Costco here? No. Okay, no. The time to sell Costco put spread was down here. When it was 470 something, selling 460 put was an easy decision. That's what I did. I've been selling Costco put for a long time down here. Okay, I haven't owned share in Costco in at least 6 months. I just do put spread. Every time it dump into the 470 and below level, I start to sell puts in the 460, 465 all the way down. No position in Costco right now. KRE. Same thing here. I like KRE long term, but right now there's no compelling reason to add to the position because the Fed is not done and they're still going to raise rate. Okay, it's going to drive KRE down. That's just the way it is. Okay, so for me, nothing to do here. Just hold for a better entry. Wait for the Fed to be done. Bank of America, same thing. Okay, same thing. The Fed's not done. Nothing you can do here. Goldman Sachs, no reason to chase it here. If it break into low 320s, I will sell put spread. That's what I've been doing. 315, 310. Okay, I use the gap fill down here as my protection. So for me, the best play whenever it come down into the below 320 in the last month has been selling 310, 305 put spread. That has worked a few times. On 2 weeks in a row, I did that, and I will do the same thing should it come down. Let's see. Energy. USO. I sold 61, 60.5 put spread, and look like those gonna be in danger as of right now. Look like there's a big dump in energy this morning. Yeah, it's gonna fill the gap. It's gonna come way below the gap. Okay, so right now pre-market look like 60.5. I'm okay. I have two put spread, so it's not like a huge position. um, I do believe the risk reward is um, being long in energy right now. If you don't have position, perhaps selling 60, 57 put spread might be a good move. Good risk reward there because the premium will be juicy, right? This morning, I like it. I like energy here, especially USO. Now, for those that follow Oxy, I think Oxy is gonna go lower. Okay, if you didn't follow, Warren Buffett just came out that he add more Oxy. Not a surprise that we know Warren Buffett like Oxy below 59 in the 58 range, so he bought more, but he have reached pretty much the ceiling on what he want to buy. So now that he's unless Warren Buffett come out and say, oh, I have worked it out with Oxy where I can own more than X percentage of the company, you're gonna have less support, less buying by the dip from Warren Buffett should it go below 58. Okay, so I'm more inclined to focus on USO more than Oxy. For a while, I like Oxy below 59 because Warren Buffett was in there buying every time. Not anymore. So stay out of it. There's no compelling reason to be in energy, especially natural gas. Okay, there's no reason. Okay, I thought, yeah, if you follow me this past 3 months, I already said it many times. It's time to go. There's no compelling reason to be in it. Sure, can you sell put spread, say 135, 130? You can, but to me, it's better play out there. CTRA, same thing, right? I said it for a long time. 26, 25, 26 was a place to go up here. Now, if you want to buy the dip, wait to 22. I do think it will test To me, testing the 52-week low is a real possibility for CTRA. So be careful on energy. Be very careful on energy. What other sector have I not touched? Let's see, MLM. No reason to be in it. None whatsoever. If they break the 20, it can come down in a hurry. Okay. Look, last time, the 20 has been an area where it flirt, but once it have a clean break, it can go a lot lower. Last time it broke, it go up from 360s, 367-ish, all the way down to 318. Okay, so yeah, easy 10% plus move, 15% kind of move. So I don't like it. I don't, I would not have any position here right now because I think a clean break can bring you in a hurry down to the 100 MA in a hurry. LH is in the zone that I like. Okay, I like 210. I have not added any share yet because I have position in DGX, but to me, selling put spread here might be a smart thing to do. Where? 200. Okay, way down here. If there's juice, because they only have monthly options, if you do 3 weeks out, I think 200, 190 spread might be worth the risk. Okay, because I think the risk reward is go long down there. To my surprise, DGX continue to surprise me. Okay, comparing the chart of LH to DGX, wow. Okay, sure, not a huge move, but still, I'm surprised, and it's on good volume too. Okay, this move is not on weak volume. Okay, there is a push here the last 4 days. If it was on weak volume, I would have sell most of my position because you know me, I don't like stock going up on declining volume, but we have stronger volume on this move, so there are some kind of institutional buying into it, so I'm okay holding it. But I do believe it's time to raise my stop to the 20 MA. Okay, so my stop is exactly at 133. This gain here for me, I'm not gonna let it drop below 133. I will lock it in, even though I do like the move. Gotta lock in the gain and not give it back. Before I go, let's take a look at some discretionary. Pepsi, oh mine, oh mine. Well, what can I say? When I said it's time to go, I've been saying it's time to go since this point. Okay, so I was way early. Instead, it's time to go up. Before 190. Okay, I said it was time to go before it get to 190. When I get to 188, I said it's time to go. For those that follow me long enough, and then of course it ran hotter, and then of course this is what you get. Another one of the situation where you get the drawdown source of fund to chase big tech. Okay, it's that simple. I dislike seeing people complaining, oh, why is my stock down? They have great earning. Well, did I not say for weeks that these stocks are expensive on fundamental basis, right? They're very expensive. It's crazy for Pepsi to have this kind of run. Crazy. So I have a put spread at 177.5. So for me, it's safer to write put spread down here, 175, 170. If there's further weakness, yeah. Because buying outright at 174, channel low, is not a bad thing. Okay, or long-term trend support. Okay, this green line right here. Yeah, this is a very busy chart. But to me, 173, yeah, outright buy. But 175, 170 put spread might be a good thing if you're willing to step in and buy the share outright. in that area, right? Yeah, see, I like Pepsi down here, a full 12%, 15% lower than this crazy up here. That's crazy, right? Coke, I bought some share yesterday where um, between 50, I started to buy at 59.98. And then the lowest that I got was 59.58, I believe. My average is 59.7 in all the shares I bought. So I like what I'm seeing here. Would I buy more? If I see below 59, okay, I will double down. Uh, that's my plan. For now, I'm okay with the small position, but I will double down below 59 and perhaps triple down in the 57-ish area, because I think the risk reward is to go long bigger 58 and below. No rush. Okay, this is a nice decline. I got out at 63, and I said it for a long time. Time to go. McDonald's, same thing. I said it for a long time. Time to go, right? Sure. Was I a month early? Yes. I said it was time to go up here on this move right here. On this move, when it break the 52-week high, I said it's time to go on this move. And of course, it run another 5% plus. And now it's back to the scene of the crime. It's back to basically where I said it's time to go. Okay. I wouldn't touch it. Okay. To me, would I sell put spread, say 275 to 70, or even 270 to 65? Yeah. To me, if there's any kind of juice going out a couple weeks, I'd rather do that, because I do think there is further decline. I said it for weeks now. I'm beating a dead horse that earning is done. The catalyst to move many things higher is gone. AI, that's a different beast. Okay, AI still have a lot of FOMO money going into there, but for me right now, it's over. It's done with a lot of the company that ran up into earning with great earning, great guidance. Well, the catalyst is gone. People are taking the money and move somewhere else, go chase AI, all that stuff. So I think further decline is in store for many of these companies. Last one, MDLZ. Finally, right? This one, wow, the fever. The fever was very strong in MD Mondelez. Talking about a gap fill, okay? It didn't even care. It went sideways for a month, trapped in a whole lot of people that ignore everything else, and then a rug pull. Where would I buy? Would I buy at 69? Maybe, okay? But I would. That would be the first spot that I would consider. I would sell put spread, say 70, 65. Well, there's not a whole lot of juice here, okay? It's not, the option here is not very juicy, so it's not like it's money to be made selling put spread here. But would I buy share outright at 69? Maybe. But it got to get down there first before I buy anything here on Mondelez. Mondelez is still pretty expensive, okay? Very expensive. See, look, 69-ish is the previous 52-week high. Okay, so for me, yeah, I like it way out there, way down here in the 69 range. Because what was resistant before is potential support, right? The good old, let me draw in a line right there. Draw in a line right there, okay? So when I get down there, I will consider buying share. See, look, it's lined up almost perfectly with the 100-day moving average. How nice, right? What a nice coincidence. I take that. Anyhow, that's it for this week. Thank you for watching. Bye-bye.